Hey guys, it's Steven. I got a very exciting video for you today. This is an extension of what we've been talking about for the last few months, and it culminates here today. How high or low will any stock go in the next 30 days? So I'm going to show you how to find the market expectations for any stock over any time frame that you want. But before we get into that, we have to get back to the basics because this is where we started together a few months ago. According to most, the VIX is the fear index, which is a numerical representation of the amount of fear or risk at any given time, which is shown by the buying and selling of options on the S&P 500. Now, that is the CNBC, the Motley Fool, the Investor's Business Daily definition, which is complete hogwash because the truth is, and you should know this, if you've watched any of my videos, is the VIX is the 1 year expected move in the S&P 500. So if we see a VIX that's 20, for example, well, that means within the next year, 365 days from that point, the market expects the S&P 500 to be within 20% up or 20% down. And then we can take that VIX number and we can go ahead and use it for any time frame, and I'll link below in the description for exactly how you could do that. But every single stock has its own VIX. So if you knew every single stock's own VIX, you could determine expected move for any stock over any time frame. And the any stock's VIX is implied volatility. So in order to find this information out, we take the stock price, we multiply it by implied volatility as a percent, then we multiply it by the square root over days over 365. So if we take a look at Netflix, for example, as I'm shooting this video, it's trading for $360 a share and 35 cents with an implied volatility of 29.47. If we take a look at that 50-day expectation, here's our equation right here. Here's our equation, and we have an expected move of $39.30. For Apple, $203.86, 28.60 implied volatility. Over 5 days, that's an expected move of about 6.82%. If you go down to Roku, for example, here, if you go down to Roku, $56.68, 82.40% implied volatility. Over 10 days, that's about the $7.73 expected move. And then GLD, which is the ETF for gold, $120 a share and 37 cents. $8.87 implied volatility over 365 days or a year, and we have an expected move about up or down $10.68. Now the question is, well, Steven, how do we figure out this implied volatility? Well, I'm in my Think or Swim platform now. TD Ameritrade has not paid me, and I get no benefit from sharing this information with you. But I go over to the Analyze tab, and I go to Add Simulated Trades, and I add in the symbol that I'm interested in. Netflix, for example. I scroll down to today's option statistics, and what do we have right here? Implied volatility, so 29.48. So that exact same equation that you saw before, where are we getting implied volatility from? Right here. Let's check another stock, Bank of America. I go down to today's option statistics, implied volatility, 21.39. How about something like Zillow? We scroll down, we go to today's option statistics, implied volatility 65.77. Or one last time, let's do Snapchat because I can't even spell. Snapchat, we have 84.61. So that's how we're able to determine all that information, okay? So how can we make money from this? Because that's the most important thing. Well, look, understand something. This is not just Steven's making this up, some pie-in-the-sky equation. The market is betting hundreds of billions of dollars every single day on these expectations. So this gauge for us is very, very reasonable. In fact, these expectations have about an 83% accuracy going back over the last 3 decades. So what we can do looking forward is we can go ahead and we can do one of these equations, right? We can do one of these equations on our charts, and we can go ahead and plot that. So if a stock is expected over the next year to go up or down $40, we can go ahead and plot that on our charts, right? And if something gets out of whack, if the stock goes outside of those bands, for example, well, there's about an 83% chance it's still going to close the year within those actual bounds. And then if we want to look back, we can go back, let's say 30 days, for example. We could figure out what the expected move was at that point, and based on where the stock price is today, maybe there's a decision that could be made. Now, I made everyone a really cool cheat sheet, which I will link to below to be able to go ahead and you guys can copy this directly to your Google Drive and use this for yourself. But if we take any stock, let's figure out a stock. Let's go to Snapchat, for example, $11.67. So I'm going to type that in here, $11.67 for the price. The implied volatility is 84.61. So 84.61. And let's say we want to kind of figure out what the expected move is in the next 10 days in Snapchat. I just type in 10 days, and now I get that information. That's a $1.63 move up or down in Snapchat, which is about a 14% clip. Let's do another one like Apple, for example. I'm going to go over to Apple. I see the price of Apple is 203.86. So I'm going to go up here, price 203.86. Great. Implied volatility in Apple. Remember, I'm going to scroll down here. Today's option statistics, implied volatility 28.60, so 28.60. And let's say we're interested to see what Apple's going to do for the next 90 days. Well, the market is betting Apple is going to be up or down about $28.95 within that range for about an 83% clip for a percentage move about 14.20. So I'm going to link below in the description how you can actually copy this and use this cheat sheet to be able to determine this information. But really the big thing is, this is reasonable expectations. Billions and billions of dollars are being bet on this all day, every single day. So you can definitely use this to understand if a stock has maybe gone too far in the past by looking back to see what it was 30 days ago, etc., etc. So if you have any questions, post them in the material below, in the questions below. I'll link below in the description to a lot of the previous videos, as well as how you can go ahead and use this cheat sheet for yourself. So I'm going to link below how you can use this cheat sheet for yourself. So I appreciate it, guys. I'll see you all in the next video.